All right, so we're seeing futures under a bit of pressure ahead of that CPI report, and of course, following the presidential debate last night. Which one do you think is having a bigger impact on futures right now?
Oh, I think it's the CPI. Everybody's looking at the Fed and what they're going to do next week, and how much they're going to cut. Obviously, the market is so addicted to low interest rates and really the liquidity, which is pushing up asset prices, all financial asset prices. So I think that's going to have a far bigger impact on the markets than what we heard last night.
All right. So consensus is that this CPI report is the final data point helping the Fed decide whether it's going to be 25 or 50 basis points. In your mind,
Right.
does it matter? Does it matter if it's 25 or 50? Is one going to move the market? Is one going to scare the market? We've heard a lot of different theories here on Worldwide Exchange.
Yeah, I think 50 basis points is going to move the market a little bit more, in large measure, because we're going to get a reacceleration of inflation. So we may not get another chance to cut interest rates in November when the next CPIs come in a little bit hotter. So they may want to front run, the inflation and increase the amount of rate cuts they have now, because they may not have the opportunity later on in the back end of the year.
Wait, so Ivory, you're seeing a reacceleration of inflation because the estimates have it pretty much holding steady from other economists. What are you seeing that makes you think that CPI and inflation overall might reaccelerate?
Yeah, like shipping containers, for example, there's a 12 to 18 month lag. It just hasn't hit yet. And what's happening with the Red Sea and the Houthis. So I think we're going to see all of those start to hit. And don't forget, rent and autos have sort of plateaued. That may change, right? That's already embedded into these numbers. My guess is that at back end of the year, we'll start to see those other factors start to play a role in the prints that we see.
I saw that in your notes that you think that inflation's reaccelerating. I think it's a bit of a contrarian view. And then also, because that reaccelerating inflation, in your mind, that also makes you bullish on gold and what people call digital gold, Bitcoin. Give me the thesis there. Why invest in those two areas if you think inflation's reaccelerating?
Well, Bitcoin is very correlated to liquidity. So we're about to cut interest rates, even though they haven't hit their inflation target. We're spending $3 billion a day on the interest on our debt. That's double what it was 2.5 years ago. It's triple what it was 10 years ago. They have to monetize all that debt. And so as the liquidity increases, remember, you're exchanging something in abundance, a dollar, for something that's scarce, which is Bitcoin. And so I think Bitcoin long term, because we have this explosion of debt, that's gonna outperform relative to the debasement of the currency. Gold does well when you have GDP that's slowing, right? We had 7% growth in GDP in the fourth quarter 22. That went all the way up to 3.1% fourth quarter of last year, but now that's plateaued. Okay. So on a rate of change basis, the economy is starting to slow down.
All right, didn't mean to cut you off there. You also see some volatility coming. And with that expected volatility, you're actually advising your clients to invest in buffered ETFs. You've come to the show with this before, but it's worth mentioning again. So we're going to show them right now. One ticker is BJUN, the other one's NJAN. It's a buffered ETF, the first one for the S&P, the second one for the NASDAQ. So the first one, you're basically covered for the first 9% of losses. The second one, the first 15% of losses. Why, in your mind, why is this a good investment right now?
So, the reason you have asset allocation is you want to diversify your portfolio and normalize the returns so you don't have the big swings up and down, right? So as one asset class zigs, the other zags. Looking back, large cap, mid cap, small cap become increasingly correlated. And that's why you start to add the alternative asset classes like the Bitcoin and the golds. They're not as correlated with the broader markets, but now you can diversify with one other thing, which is called the strategy. In this case, these are the buffered ETFs. In other words, you may have, like BJUN has a 16% cap. So if the market's up 20%, you only get 16%. If the market's up 15%, you get all 15% of that. On the flip side of the coin, if the market is down, 10%, you only lose 1% because you have what's called a 9% buffer. If the market's down 5%, you don't lose anything. And these reset every year. In this case, it resets in June. And so what I'm doing is I'm putting guardrails on the portfolio. That's just another layer on top of the asset allocation.